What's up? So I'm want to just basically do a honest review on futures. For those that don't know who I am, I go by Solo ETV, and I mainly talk about Forex a lot in my channel, indices. But of course, y'all been knowing what's been happening with pretty much, I would say, meta quotes, and then the whole prop firm industry just kind of shifted ever since the incident had happened with my Forex fund. So a lot of people have been skeptical about, I guess we could say, trading Forex with like unregulated brokers and things like that. And then it's also been very hard for our USA residents to really trade prop firms nowadays and trade Forex just because of this whole transition. So I've been dabbling into futures, and I know I've been talking about this in a lot of my videos, and I do want to give my honest review. I feel like it's very important to get this because I'm really just going to honestly tell you guys how I feel about futures and why I personally feel like this is something that you guys should be leaning into as well. So y'all know, like I said, I've been talking about for futures for a minute going into this year, and I actually started transitioning over to futures the beginning of this year, the end of last year. And I honestly say futures been way more fluent than Forex in a lot of different reasons. One is being the market is just way more smoother. There's not too much of this manipulation stuff that happens. So when you deal with Forex brokers, you have different liquidity providers, and they have different data they get from the stock exchange and so forth. And when you have different liquidity providers, one broker is going to say or show you price went up 5 points or 5 pips, but the other broker is basically showing you it went up 2 points or 3 pips, and you're like, yo, what's going on? And then you got to realize there's things called slippage. That happens where price will out of nowhere be at like 100 and then slip to 105 or 105, and you're like, yo, what just happened? So when you're dealing with futures, you don't have to worry about any of that because CME, right? Chicago Merchant Exchange. When you're trading futures, that's the exchange that you're working with directly. So you have something called data that you have to purchase through the actual Chicago exchange. It's kind of like the stock exchange in New York, where you get your own data, you purchase your own data. You don't have to worry about that liquidity provider. Everything is coming directly from the exchange, rather than when you're dealing with Forex, you have the middleman, which is the liquidity provider, in a way where they can manipulate price a bit, or they can show you different data from another broker. And with the with the, I guess, Chicago exchange, it's all coming from one place. So regardless of whatever broker you are dealing with as far as futures, they should all equivalently be the same, right? Unless it's just a different contract name and they offer different commissions and so forth. And another nice thing about futures is that you don't have to worry about the spreads plus commissions, and then you got different leverages and so forth. You literally get pretty much one price. So for like TradeStation, they charge 50 cents per side. So meaning per contract, you have to pay 50 cents. Rather, if you're buying it and selling it, so based off your contracts, you have to pay that. That's really it. There's nothing else to it. You have other little fees that you got to worry about, like per month you have to pay the data feed. I think there's some like prop firms out there that even offer like per year or just one time, if I'm not mistaken. You don't have too much to worry about when it comes to spread slippage and all that stuff. And y'all know I am a scalper, and I have a bot right now that calls out a lot of futures trading, and that's really what it's tied to. And it's been running very smoothly lately. I know we are probably, I think, at like a 70% win rate overall. It's been calling out mini lots or micros, contracts, mini contracts, e-mini contracts, and so forth. And it's been really well. So I say that's really cool. Now, the con, that there's a few cons on the future side. And I'll say one of the cons is being you do have to put a little bit more money up when you trade futures, rather than in the Forex, you put $100. Hell, you can even start with $20 and scale that to XYZ. You can't necessarily do that with futures, even on what they call a micro contract. Basically, what a micro contract is usually if you're trading anything under $1,000, I would probably say anywhere from $500 to $1,000, you can trade a micro lot or micro contract. And that's basically just equivalent to doing the same thing in the Forex side. If you have a small account and you want to do micro lots, and that's like 0.01, 0.02. And then anything over like $1,000, you can get into e-mini contracts where you can start trading different things. And for me, I trade oil a lot too. So with oil, you have to have a certain amount of money to trade oil. And I would say just to feel comfortable, you pretty much have to worry about the amount of money you're putting in, but just to feel comfortable in trading something like oil and even gold, you can trade gold. Future side, you gotta have probably like 5K, 10K just to feel comfortable and risk pretty much what you were risking the Forex side. Another nice thing too about futures from Forex is it's almost double what you would make, what you would do on the Forex side. So if, for example, you take ticks, right? The futures is measured off of points. So what that basically means is 1 point, you can make maybe 50 bucks off of 1 point, you know, or 100 bucks off of 1 point, just depending on what contract you're buying or selling. But you have to also look at ticks. So ticks is like micro points. So 4 ticks is equivalent to 1 point. Rather than Forex, I believe 10 ticks is equivalent to 1 point. So you guys can already see the difference there. So the moment it goes up 4 ticks, you already at 1 point. Rather than on the Forex side, you got to go 10 ticks just to get at 1 point. So you can really triple your money way faster on the future side. But yeah, you have to put a little bit more money into the futures, but you can trade more money. You don't have to worry about that fake manipulation that some brokers would do because of the liquidity provider they're working with. You're getting from the same exchange that everybody else is getting from that trades futures, which is here in Chicago, which that's where I'm at. And also you get your own data. You pay for your own data, so you're getting real data, which is good. And then the biggest thing is there's no slippage, no manipulation besides what you're getting from the exchange, and that's a big bonus there. So I say if you really want to get into trading Forex or futures, you can definitely tap into it. Another nice thing about it is you have the, I guess we can say the risk. It's a little different. You have to look at it as far as the amount of contracts you are buying, and also the commissions that broker charge. Like you have TradeOvate, you have, this is which I'm using. You also have TradeStation, which I also have, and you have different prop firms. But a lot of these prop firms are working with these two brokers, or Rignit is another one. So you got different things that you got to focus on when it comes to risk, but the risk is way easier to understand. I would say everything is simplified on the future side. So if you are a USA client like me, definitely want to still trade futures. I still trade Forex. I'm not stopping Forex. I don't really trade Forex too much like currencies, but I do trade indices in the leverage side, and I guess we can call it the Forex niche. But I do trade still with Osprey FX, and I still of course have the prop firm, which is Funder Pro. I do the one phase challenges. I actually have the bot running off of indices and futures as well. So for those that's still trading indices, you're literally trading futures. It's the same exact thing. The only difference between the two is, like I said, the data. Some brokers are still going to show different price points, but you see how aggressive and how volatile indices are. So the moment you go into the future side, like I said, it's almost ×2. So whatever you would make on the Forex side, if you're trading indices, just times it by 2. That's basically what you can make and scale in the future side. But of course, you got to have a little bit more money and pretty much go from there. So that's really it, guys. Now, if you are interested in this bot, there's going to be giveaways we will be doing. I do recommend you guys doing one thing right now. I want you guys to go ahead and sign up with Funder Pro down below. Go ahead and get your phase 1 challenge. You can do the 150K, 200K. I just recommend phase 1 because it's quicker. Get your phase 1 challenge. Use the bot. You can go ahead and use the bot once you sign up. Make sure you hit me up directly on Instagram. Say, hey, I signed up through Funder Pro. I'm ready to use your bot, and you will get a discount, 20% off for your first few months. And then from there, you can use that bot to help pass and then grow your account and get your payouts from there. So if you guys are interested in that, like I said, make sure you do the first thing, which is Funder Pro. Sign up through the link down below, and then go ahead and sign up to get, or just hit me up directly and let me know that you did that, and I'll give you guys that 20% off code for a few months. And then you can go ahead and start using the bot and so forth. Other than that, man, I appreciate y'all. I'm gonna start doing live stream videos on the future side, and also still, of course, doing it on the Forex side, but mainly the future side is what we're focusing on for now. And yeah, we'll go from there. Peace.